Live. Sorry for the delay, everyone. And all I can say is we had a little bit of a technical difficulties. So I apologize for starting a few minutes late. But welcome, everyone. We had a couple of weeks off, a little bit of a hiatus, but we are back with another episode of the AI Circle brought to you by the iFlip YouTube channel. Today marks episode 16 and we have quite a bit of stuff to get to today. So joining me, I am your host, of course, Aaron Yoon. I'm the product manager here at iFlip, and joining me, of course, is our esteemed CIO, Kelly Korshak. Welcome, Kelly.
Hello, Aaron. Sorry about the mishap, everybody. I don't know how to put in a password, apparently.
Yeah, if only we had AI for that, right? And to help us
Used all of it.
to use all of it. All right, so we are getting started a little bit late, so I'm just going to jump right into it. We're going to start off with everyone's favorite piece of information, the disclosures. So bear with me just one moment. Disclaimer: iFlip Investor Incorporated and iFlip Financial Services are not financial advisors and do not make buy, sell, or hold recommendations on any financial instrument. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk. You should speak with your CPA or financial representative to ensure that the iFlip Smartfolios that you select are suitable for your investment profile before trading in a live brokerage account. So with that out of the way, I'm going to pass it right back to you, Kelly, as soon as I can get this thing out of the way here. And again, we had news happen today. It did move the market a little bit. Catch us up. We had a couple of weeks off. What did the market do the past couple of days, and what was significant about today?
Well, today's number, of course, was the CPI. Tomorrow's number is the PPI. Today's number which was long awaited, was the Consumer Price Index, which is a measurement of inflation, of what consumers pay for various goods and services. That number came in as expected, and the market opened up basically steady to a little higher. However, it ended steady to a little bit lower, down just 0.5% or so, just marginally less than that in the S&P. Tomorrow's PPI number, generally when the CPI number comes out, the PPI number comes out the next day. If the CPI is within expectations, generally the PPI is also within expectations. However, oil prices have gone up significantly over the last few weeks, and I don't believe that some of these numbers will be incorporated yet until the following month's calculations. But I would normally think that when you see what we've seen in the quote-unquote volatile energy sector, that generally will show up quicker in the PPI than the CPI. So I'm expecting tomorrow's number to come in a little bit hotter than expectation, where today's number came in just a little bit lighter than expectations. And that'll be the only main driving number for the Fed to look at until they have their next meeting, which, in my opinion, they will probably, it's 50-50 Fed funds, that they will probably likely raise another 0.25% at their next meeting.
Thanks for that, Kelly. I think that by now we've talked about this so much that we kind of expect the rate hikes, and all this is just kind of expected. We're kind of getting used to it, or some of us are maybe even getting numb to it. But I think a lot of us are curious, though. What does this mean for the AI? Like, what is our AI doing, and how is it interpreting this data? And more specifically, the question is on the screen here. What has to happen for the AI to get long again in the market?
This is kind of one of those, first of all, that is the exact right question. I'm glad you asked it, because that's what we talked about prior.
That's what I do around here.
Right? Well, there's certain questions that matter. Our machine learning algorithms had us out for most of last year. Obviously, that served us well. It served us well because the market, of course, the S&P 500 was down in excess of 19%, and we were down, obviously, quite a bit less on our main models. in the area of 4%. This year has been a different story. The S&P is up around 7% on the year, or 6.8%. And we, on the other hand, are down about 1%. Why? Because our machine learning right now is not allowing us into the market. The machine learning, remember, is being trained on information. It's always learning. And the information it trains on is information that comes in generally within 2 weeks to 30 days after the fact. And that's how we trained it. And that's how it's been able to make decisions in the past that have worked out in our favor in most cases, but not in every case. What's going on this year is a very, very slow grind higher, where the market, as most pundits will notice, wants to go higher. And algorithmically, there are signals that show us in the market, but they are being rejected by the machine learning algorithm portion of iFlip's technology. And that portion is looking at a few things that it just simply does not like. So here's what they are and why we're not getting into the market, and what would it take for us to get in the market. A rate cut would certainly do it. A rate pause would not. A relaxation of credit expansion. Credit has been expanding at a very high rate, as have credit defaults. There is a huge amount of credit defaults occurring on credit cards, and there are huge amounts of defaults on auto loans. Those two components, I suspect, because they're the components that stand out in when the machine learning looks at information, it uses certain information and it tells me that this is the information that provided me this best return. So we know to feed it that information, and then we just look for other information that might even enhance that further. That information, which has worked in what the machine learning has been trained on, is currently keeping us out of the market. And by the way, on an algorithmic basis, I can tell you that we would have only been in the market about 1.9% lower than we are now if it was an algorithm. And it's our machine learning that says, no, don't even go in now. So I feel that to get in, it wouldn't take much, but it would take a reduction in interest rates. The Fed funds rate being cut by 25 basis points would do the trick. And the other thing that would happen that could cause it is if all of a sudden credit card expansion, the more likely element, started to decline.
Thanks for that, Kelly. I think so. You just mentioned it that the S&P is actually positive for the year. It's having a pretty good year if you only look at it in a vacuum. 7% over the first quarter and a half or so is not bad over the long haul.
It's actually pretty good.
It's actually pretty good, and we're actually behind that. And
yes, this year,
and that's intentional. Now, what would you say to some people that are looking at it and comparing is what we do as humans, can't help it, and be like, God, if I just bought and held in 2023 and I didn't do iFlip, I would have been better off. Jeez. And like they might not express it to us directly, but they might be feeling that little bit of FOMO. What would you say to people who are feeling that way?
I probably would respond in the converse and say, what if iFlip kept you in all of 2022?
Right.
So if we kept you in, you would have been down 19.5%. So my immediate response would be that. But there's a couple other points I would like to make. I can tell you, I've been looking at a lot of various accounts. Believe it or not, since June of 2021, the S&P, June of 2021. Now we're coming up in 2 months. It'll be June of 23. The S&P is down 10% over that period from June of 21. So over the last almost 2 years, 22 months, the market is down 10.44%. There's nothing that I can point out that allows us to say the market is in good shape. It hasn't gone anywhere. And as a matter of fact, from June of 2021, and I point that out is because this is a few months after COVID showed its lows. It rallied heavily from March of 2020 all the way through literally August, September, October of 2021. And the market continued to go up. If you would have bought at that time, you would have been up as much as 10%, and then you would have been down as much as 30%, actually 40% from there. And now you would have been down just 10%. So that's the volatility. Flip has basically removed all that volatility over the last number of years. And remember, Flip was long right after COVID. So again, for us, I always like to point out, and I know it's so difficult for people to understand, that performance, of course, is a metric. But performance means very little if you don't also consider the risk you took to get that performance. And that is the hardest thing, I think, for investors to understand, that if you look at one thing, the only way you can compare it is to another thing. In the general way people compare the US stock market or an advisor or a funds or an ETF's measurement is by performance. And so you might measure the performance of Apple versus Microsoft, or the S&P versus the FTSE index, which is the British index. How did the S&P do relative to the same index in Great Britain or France or Germany? How do you measure it? Well, what we do is we just measure what we put a basket in of stocks that are managed by technology, machine learning, and algorithms, and we measure that against the S&P. And over the long run, the risk management portion is the only way that we're able to beat the S&P 500 over a longer period of time. What is a long period of time? Is it 1 year? Clearly it's not a month. And clearly it's not generally 6 months if the market's going straight down or straight up. It should be over a longer period of time. 2-3 years is generally a decent time to start to say, hey, what has occurred over the last 2 or 3 years that says Flip is better than just putting your money into the market with, say, Ken Fisher? He's a perfect example. And if you were with Ken Fisher, you would have been down about 12 to 13% over that same period. And last year, you would have been down about 24 to 25%. I know people that have lost with Ken Fisher, for example, last year, 28%. And he is considered generally one of the stalwarts of the market. You generally will get the S&P a little less than the S&P if you invest with Ken Fisher. Problem is he's not managing your risk. And that's kind of where we come in. So I think the long-term prospects of our product is still very good. And I even think by the time this year is out, I think people will understand why the machine learning kept us out of signals that maybe other algorithms might have taken. But in our case, the market really just hasn't advanced that much. And if you look, for example, over the last 2 weeks, the market went up in 1 week, but the market's only up 3% over the last few weeks, and it's gone nowhere at all over the last week. And that's when it's collected all this new information. It still can't go anywhere.
Yeah, it's been pretty range bound recently.
One more thing, Aaron, I want to point out to everybody out there. I can tell you that most of this is in a very narrow bunch of stocks that have done well. Remember, it's the Apples and Microsofts and in companies like this that are major parts of the U.S. stock indices, including the Dow or the S&P 500, and the rest of the market has not participated with it. I feel that about 10 stocks are allowing the market to be perceived as doing well this year, up 6.8% in the first quarter. But it's only because of those stocks. And those stocks, I feel, have hit their limits. And I think it's a matter of time before the market gets the memo But guess what? All is not well in Denmark.
Hmm. Hmm. Well, you actually kind of read my mind there just a little bit, which is always impressive. Because there is a flip side, no pun intended, to the question that I had earlier. Because most people who are using our smartfolios, and most of our smartfolios are pretty heavy into the S&P as by design, which means that they've spent over a year probably with more than 90% of the time, like with their watching their account kind of do nothing. And there may be, and I know for certain this is true for certain people. They're like, should I be invested in something else? Right? Should I be not just plugging my money into the smartphone because it's not doing anything? Should I pull out my money in from my Smartfolio because it's not doing it anyway, and wait until it wants to get back in or something like that? I know we can't give advice, but what are your comments for someone that is maybe feeling that way or thinking that way?
Well, two thoughts on that. One, if you put your money somewhere else and you had your money invested, you might have also, as I pointed out originally, over the last 2 years, the market hasn't done anything except go up 10%, down 30 or 40%, then up about 10%. So it has gone places, but it ultimately ended up behind the starting line. So in other words, the market hasn't gone anywhere. In Flip's case, all we've done is smoothen the road also to go nowhere. Flip's design is to take profits and take opportunity when it exists. And over the last year and almost 2 years, no opportunities really have existed unless you wanted to experience pain. So, for example, Tesla's up 100% over a month and a half period. It went from about $100 a share to $200 a share, and it's now backed off to say about $180 a share. But it's doubled. But hold on, if you had held Tesla prior to that, it went down 70%. So remember, everybody, when something goes down as much as 70%, where Elon Musk lost his a spot to say he is the richest man in the world, he fell underneath that, and then he rallied back when his stock went up 100%. But his stock is still down over 50%. So is kind of interesting, and as good as that company is, it experiences huge volatility. So no one has made money over the last 22 years. Now, where you can make money now is some of these portfolios, the energy smartfolios, are offering dividends. Dividends have the unique characteristic that no matter what happens, you should get the dividend unless the company decides to pull back on its dividends. Most dividends are paid generally by oil companies, energy-based companies. We have portfolios like that. So if a person is inclined so, and again, any opinion I express here is just my own. If a person is so inclined, at the end of the day, you may want to say, hey, you know what? I'll just take the dividends and take my bet on that. If the market's going to go nowhere, let's bet that the market doesn't go anywhere for another year. Well, then you at least get the dividends, and some of those dividends are between 8 and 10%. I don't think anybody minds making 8 or 10%. That's one thing. Another thing people could do in the interim is, if they feel that the market is still going to go nowhere, or their Smartfolio that they have right now isn't going to go anywhere, they have the opportunity to buy short-term money market ETFs that could pay, some of them pay as much as 4%. So if you have something making 4%, it's extremely liquid. If a time occurs in the next 6 months where you might say, you know, the market seems to be going somewhere, you can pull it out of your short-term dividend product and you can invest in a Smartfolio then. Those are things anybody can do and may or may not want to do. My instinct is to stay the course, like we're always told to do, no matter where you're at, because the Smartfolios have a way of all of a sudden getting involved in something and they buy creeping markets that turn into leaping markets. Remember, creepers turn into leapers. Right now, the market is not even creeping along, it is limping. It's not creeping, it is limping along with the desire to go higher because it just has been, feels like it's been oppressed for so long. However, again, we are at extremely high inflation, the highest in over 40 years. Yes, maybe it's lightning, but that doesn't mean that if the interest rates are 5% and the inflation is 5%, which is what it came in at, what is the value of your money? It's not going to do any better in a stock that really, in most cases, aren't going to be able to offer you much more until something happens, some catalyst, probably from the government or the Federal Reserve,
Mm-hmm.
to be able to say we have a clear path. So currently, the machine learning aspect, AI, doesn't see any clear path at all. And that's why it's keeping you out of the market. So my instinct in what I'm doing is, again, this is my personal thing, is I kind of am looking at dividends right now. I think we kind of can make a simple bet that maybe the market does nothing. But if it does nothing, let me get paid for that.
Right.
So that might be a thing for people to consider, especially since that seems to be the outlook overall, probably until the 2024 elections.
And we have a Smartfolio that is very dividend. It's not all dividends, but it's very heavily focused on dividends. Can we briefly, in 1 minute, just summarize that
Sure. I mean, there's two of them right now. The conservative portfolio is heavily into dividends, and of course, red oil portfolio is very much the same. Red oil is just all oil. The conservative portfolio has oil components, but other components as well that also offer dividends. AT&T. It also has a bond ETF in there that's paying 5.25. So that has very little volatility. Looks almost like a money market. So those kind of things, you get rewarded if the market goes nowhere. And if the market goes up, you might participate in some of those stocks going up and you get the dividend. If the market goes down, those stocks will go down, but you'll still get paid the dividend. So it is good protection for the downside if you feel the market's going down. And it'll give you reasonable upside because of the dividend if the market goes up. So that seems to be kind of the way I'm noticing some trends inside of our software where people are moving in this direction. But that's their own personal choice.
Right.
And it does make sense. However, those people that are sitting in, for example, the SPY, those things, when they turn around quickly, but they're just not getting the signals. Either one of them, to everybody out there, any one of them you're in will, I feel, perform just as they have in the past. Once the market finds its legs at some point within now in the next year and a half before the elections.
Awesome. Thank you, Kelly. And that'll do it for the updates from Kelly. And now we get to the fun stuff, because I know that's what everyone is waiting for at the end. So for if this is your first time joining us, a lot of people like to just kind of listen to this kind of like a podcast and listen to it passively. However, now is the time that you want to stop what you're doing and engage on your keyboard or phone or whatever device you're listening on or you're watching this on, because we are getting into the trivia question. Now, before I give you the actual question, what do you win if you get the trivia question correct? Well, we have an event coming up very soon in Dallas. It's just around the corner. And we do have a couple of VIP tickets left that we can give away on these AI circles here. And so the prize for tonight is that you will have a VIP ticket to the Dallas event. Now, if you're already a VIP ticket holder, then we'll cover your hotel for those 2 days, because it's almost the same price. Okay, so what is the trivia question for today? It actually involves you, Kelly. A couple of weeks ago, or a couple of AI circles ago, Kelly made a prediction. and it hit this week. So the question for you all is, and I'm going to give you a few minutes to do this because you might need to, you can't Google this. You're going to have to like either really dig into the memory bank or browse through your iFlip notes if anyone does that stuff. But what symbol that Kelly predicted hit the predicted target price this week? It happened, I want to say yesterday or 2 days ago. It's like literally within the past 24, 48 hours, one of Kelly's predictions hit the target. So whatever the symbol that may be, put that in the chat, and I'll give you a few minutes to do that. And I will also say, while people are putting in their entries, I will say that in addition to the winner for this prize tonight, for this particular trivia giveaway tonight, we have a bonus. So for anyone who is, like I said, we do have a few VIP tickets available. So for the next 5 people who purchase a regular ticket, which is currently still early bird special is still happening. It ends on Sunday. So if you're on the fence, you got it. You only got a couple of days left. For anyone who buys a general ticket, which is $97, we're going to give you an automatic free upgrade to the VIP. Now, what does VIP get? They get way more swag. They get way more raffle entries for the event, not the iFlip raffle, the raffle prize that we're doing at the event. We're also going to have a VIP cocktail party that is just exclusively with the speaker, so you can hang out with them, grab a drink, and pick their brain. And Kelly will be there, of course. Randy, of course, everyone knows, and all of the speaker lineup. We have a very, very impressive speaker lineup. And this time, for everybody, in case anyone's wondering, the event isn't just going to be about trading like it was last time. We really focused in and did a deep dive on all the financial markets. This time, instead of going deep, we're going wide. We're going to talk about real estate investing, regardless of what the crazy rates may be. As much as the rates go up, some real estate investors know how to profit anyway. That if that's interesting to you, you want to pick up a ticket. The concept of infinite banking, right? These banks are failing. Maybe you're interested in becoming your own bank, literally, right? Like loaning yourself money and double dipping on both ends from not just the loan, but also gaining the interest, right? It's a very unique concept that a lot of people don't know about, and even the people that do know about it often do it wrong, right? They do it incorrectly, and it becomes not worth it. We're going to talk about all of the ways you can legally pay less taxes. I think everybody wants to do that. I don't know anybody that wants to pay more in taxes. That doesn't make any sense. So all of those things. So last second here, I'm going to give you 30 more seconds to put the answer in the chat here. The trivia question is, what symbol did Kelly predict that hit his prediction target just within the last day or two? Okay. And let's put up the timer. Give you 30 more seconds starting now. All right. I guess this was a difficult question. We didn't get that many answers. We didn't get that many submissions. But we did get one right answer. And the right answer is, of course, Bitcoin, submitted by Matthew C. So Bitcoin, Kelly, tell us about your prediction for Bitcoin and what made you predict it at that price, and how did it get there?
This was a pretty easy trade. It was pretty relevant. There's 2 things I looked at. One, when Bitcoin closed above 25,000, it stayed there, and it didn't move much beyond that. You knew that the next objective would have probably been 1 standard deviation higher. I also have the advantage that I have a machine learning algorithm that's pretty accurate on that, and it predicted the same thing, a 30,000 price point for Bitcoin. It achieved that. But there's another thing I look at. For me to give you why I felt positive about that trade was because there's a spread between the Global Bitcoin Trust and Bitcoin itself, which was a whack. It was something called a dislocation. And that also told me that, guess what? Too many owners in the Global Bitcoin Trust means that they had to start to buy that. And they were a big buyer of Bitcoin all the way up to 30,000 because they had to reset their spread. So that was the thing I saw. So you could buy Bitcoin or the Global Bitcoin Trust, and it did achieve its objective. From here, I can't make any further prediction on that one. I would say that if it fell back to 25,000 or so, especially marginally below it, I would be a buyer. And that might occur if the stock market starts to stumble in the coming months.
All right. Well, for tonight, Matthew C is our big winner. And just to clarify, how do you qualify for this ticket? And is this a time-sensitive prize? So we do need you to do this right away, Matthew. You need to be invested in at least one Smartfolio to qualify for trivia prizes from the iFlip YouTube shows. So just send us your account number or send us a screenshot and show that you're invested in a Smartfolio, and we will get you set up and for a ticket right away. Okay, now how do you send that to us? Let me put this email. You just email us right here at mailbag at iflipinvest.com. It's on the screen for you. Just mailbag at iflipinvest.com, and we will get you sorted out right away, Matthew. And once again, a reminder, the next 5 people that buy a regular ticket get free upgrades. And that means you get to hang out with Kelly, rub shoulders with all these professional finance experts that are just making a killing right now because the opportunity is right now. Okay. So that does it for episode 16 for the AI Circle tonight. We thank you so much for joining us. If you enjoyed this content, please consider liking this video and subscribing to the iFlip YouTube channel. Make sure your notifications are on so you don't miss another episode. We will see you next week with the iFlip Mailbag Show. And with that said, good night, everybody. And
thanks, everybody. Happy to see anybody in Dallas that shows up and have a beer.
Absolutely. Yes. We'll see you in Dallas. Take care.
All the best, everyone. Thanks, Aaron.